Hello friends, in the YouTube channel Advocate Amit Kumar Gupta. Today I am going to discuss the case of Commissioner of Income Tax versus UTI Bank Ltd. This case has been reported in 447 ITR at page number 662 and the matter has been decided by our Honorable Supreme Court. The date of the judgment is 1st September 2022 and this case is on section 14A disallowance, read with rule 8D. We have seen in our assessment proceedings that whenever the revenue authorities find on the asset side of the assessee, which is the investment in shares, that is the investments in exempt income, investment in those investments which are yielding exempt income, then they go for section 14A disallowance without considering the fact that whether any expenditure has been incurred on earning this income, whether any exempt income has been actually earned or not, or without telling that which administrative expenses have been incurred by the assessee in earning that income. The assessing officer can suggest disallowance under section 14A only after giving a finding on the disallowance suo motu made by the assessee. For example, if the assessee has made disallowance in its books under section 14A, so first of all, it is the duty of the assessing officer to tell that this disallowance is not sufficient and this much of more administrative expenditure has been incurred for earning the exempt income. So in this present case also the assessee is a bank, UTI Bank, which have near about 3400 crore rupees of interest free funds. The investments have been made in the interest free investments of near about 600 crore rupees and the tax-free interest has been earned of 18 crore and the assessee has also made a disallowance of near about 5.5 crore rupees. But ignoring this and without given any finding that this much of the administrative expenditure has been incurred by the assessee to earn the exempt income, the assessing officer goes for an addition of 27 crore under section 14A read with rule 8D. In the assessee's own case, the High Court has given the relief by following that judgment for the various years. The ITAT has also given relief to the assessee. Even then, the department is contesting this case at the higher levels. So the matter came to the Supreme Court and the Supreme Court said that by giving the reference to the very famous case of the South Indian Bank Ltd on this matter, and said that the assessee has made suo motu disallowance and the mannerism of making disallowance under section 14A is that the revenue authorities cannot go for the straight jacket formula under section 14A read with rule 8D without quantifying the amount of the administrative expenditure which the department alleges to have incurred for earning the exempt income by the assessee. So, in this case, the Supreme Court categorically mentioned that the section 14A disallowance made by the assessing authorities is not on valid grounds and that is not in the four corners of section 14A, and following the judgment and upholding the judgment of the High Court in which the relief has been given to the assessee, the Supreme Court also gave relief to the assessee. So this case is very important in dealing with all those cases in which the assessing officer is straight away rejecting the figure of the disallowance made by the assessee and adopting a different figure without mentioning that how much of the administrative expenses have been earned by the assessee to earn the exempt income. Friends, this case is very important. At the end of this video, once again I am repeating the name of the case. The name of the case is Commissioner of Income Tax versus UTI Bank Ltd. This case has been reported in 447 ITR at page number 366 and the date of the judgment is March 22, 2013. Thank you friends.